Today in the livestock market, we had a little bit of a mixed bag. With the cattle opening a little bit higher, I think the futures discount to cash is kind of underpinning the market here. The August contract did get a little bit higher, and clearly the August is even at a discount to the October, and we're switching over to the new front month market. So the little bit of the technical issues and things rolling back and forth. We did have a $2 range though in the live cattle market, and I think. Now, if we look over into October, we're seeing a $5 range as opposed to the $8 range that we had in the August. The August range was 130 to 138. Now we're looking in the October at 138 to 143. Just to give you an idea of where we're at here, I think that keep in mind that these hot temperatures are also going to take off some weight on some of the cattle. And I think that's bullish to the markets as well. The CVOL is sitting right around 14.2%, but if we continue to move as we're doing, I can see that there possibly will be an uptick on that. Now the feeders were mixed today. The higher grain prices kind of put a lid on the futures here. They did extend lower at one point, but moving back into that $6 channel that we had been in from 170 to 176. But basically, the hard part is that we basically gave back all of last week's rally because we had breaking out and gotten up to 181 at one point. We kind of gave back those gains, but I think that the lower close is just showing that the strength in the grain markets really adding some, a bullish sentiment onto the feeders, but certainly not the live cattle. So it's a little bit of a mixed bag there. Now the hog market did jump up yet again, creating another gap. Technically will fill perhaps at some point, but those higher pork cutouts just revealed that there is stronger demand here. The momentum has pushed that market through and break out of the channel that we had been in really since the beginning of April. And we got up to 112.725. That is pretty big right now, and of course we're moving to the October strike, which hasn't really caught up with the volume yet, but it's going to be catching up very soon. But we reached just above the $95 mark. So our range now is not going to be above the $100 mark. It's just going to be just below the 100, where that $100 will be the resistance as opposed to the support. But these are technical numbers that we're going to be watching going forward, and they've been very useful to us as to how the market's been been working and bouncing off back and forth. But right now the CVOL and the lean hog market is 28%. And we were higher and still looking pretty strong. And even the deferreds were stronger as well. So we'll watch to start the week. It looked pretty good.